As a product manager, it was all about a particular product going into market. As a solutions architect, it was about how do you solve a business problem with a bunch of products put together, and how do you take, how do you understand the customer's needs and their business problem, and then understand how technology would solve. So I think that gave me a pretext, like a good understanding on in terms of what is needed for to understand on technology, the technical and commercial aspects on how to take a company.
Welcome to the Startup Operator podcast. I'm your host, Roshan Karyappa. My guest today is Sameer Brij Verma, who is the managing director at Nexus Venture Partners, which is one of the best known VC firms around. Sameer has been an early stage investor in over 38 companies and is on the boards of companies like Unacademy, Hasura, and Postman. We have plenty to talk about today. So without further ado, welcome Sameer. Thank you so much for making the time.
Thank you, Roshan. Thanks for having me over. It's a pleasure to be on your show.
Right. Sameer, so maybe to begin things, we could talk about what your day looks like, what percentage of your day goes in listening to pitches versus managing LPs versus other things that you do. So take us through what it's like being the managing director at a fund.
Well, one of the things is that Nexus is a very differentiated fund. I would say in many ways that we don't we're a very we don't have too much of hierarchy. It's a very small team, and it's one team across three offices. We're just a 10-member team, as you can imagine, right? And we're the largest homegrown venture firm in the country. So titles really don't matter at our firm. In fact, if you look at our visiting cards, they don't carry any titles or any of that stuff. So all of us are united in our purpose of finding and partnering with the best entrepreneurs that we can work alongside with and help them achieve their goals of building a good company or a great company, I would say. So that's what we all endeavor to do, whether it's an analyst at the firm or managing director. All of us are united in that very purpose. We do about 6 to 8 investments a year. And we typically are, 85% of the time we are doing Series A investments. These are first institutional checks, $2 to $6 million checks in companies. So that's what we try and do. We are given the size of the fund in terms of the number of people. We are very selective about what we do. We come across great entrepreneurs all the time. We try and take very few concentrated bets and make concentrated investments. Across the board. So just to set that as a context, our typical day looks like, for all of us, would be pretty much the same, minus of some bit of managing of LPs and some bit of fund administration stuff, which we have very, very good coverage with our general counsel and our CFO. They do a phenomenal job doing that, and then some of us pitch in as well whenever as is needed. So they really cover our ears in many ways to kind of help us to focus on what's really important and what we do best, all of us on the investment team, which is finding great entrepreneurs. So a typical day would anyway start with a lot of things in terms of looking at new investments. Given a small team and the COVID situation, we try and interact a lot as a team. Luckily, as far as the India team is concerned, we get on calls very, very often, discuss opportunities. 85% of the time at Nexus, you would be meeting, a partner in the first call. For all purposes, we tag team and work on things together. So 85% of the time, that's what would happen. We'd be doing a bunch of calls together as a team with entrepreneurs. And if we like it, we like what we hear, we like the team, we like the idea, and we like the market, the basics check out. We're very fast to get on to sort of a India partnership or a global partnership meeting. So we can do that really fast because that's the advantage of having a small team, which is very nimble and and works very closely together. So that's what a typical day looks like. We are obviously sitting through a lot of new ideas, pitches, and things like that. But also a lot of us are involved in the portfolio side of things. So we are obviously helping companies out. Trying to add value wherever we can, whether it's on hiring, whether it is on helping them think through certain things, whether it's helping them introduce them to potential customers and all of that kind of stuff, right? Or There might be board meetings on some days or the other, right? So we are always in touch with our portfolio, fairly high touch with our portfolio, as a fund across the board. So it's a mixture of portfolio management, looking at new investments, and a little bit of fund administration work, and potentially talking to LPs or potentially talking to people within the ecosystem. A lot of the time also we are spending time in terms of like kind of scope out spaces and scope out areas that we feel will be interesting. So we all brainstorm around sectors and areas, and shared learnings with each other in terms of how do we see things panning out in certain spaces, right? If you've come across interesting ideas which we don't unfortunately, or in some cases don't partner with, but we share learnings around what could work in those areas potentially, so that if another entrepreneur comes around in those spaces, then we can have faster decision making and know what we need to look for in those spaces. So I think the advantage at Nexus is that being a small team, we can share our learning, share our things a lot faster, and we can our turnaround times are as a result are faster when we want to do something or the other. The downside obviously is that we have a lot of things coming at us, so we're a lot faster in cutting out stuff which might not be a fit for us in some ways. But we just need to do the best for we want to bring our best to the companies that we partner with. So
Right.
that's what we're trying to.
Right.
Well, that's what a
So,
typical day looks like. I think it's the one thing in venture is it's not predictable. It's every day is very different. You might be
yeah.
troubleshooting an incident in a portfolio company. You might have a dedicated day doing something else. Looking at things, or just looking at sourcing pipelines and things like that. You might have dedicated days around that, or you might be doing deep diligence on a company where 2-3 days of it just are dedicated on that, coming up with facts, doing ref check calls, doing all of that kind of stuff. So it's not predictable, but it keeps changing, and that's what I love, the spontaneity of what is involved in this business, right? And working with very, very smart people. Our team is phenomenal. I get to learn so much working with all of them. So every day
That's
is a new day. So.
fantastic. So, a key part of what you do is also sourcing the right kind of entrepreneurs and startups, and then being lucrative enough for them to partner with you, right? Just talk us through some of those things that have, some things that have worked for you in terms of sourcing and, partnering with these founders and startups.
Sure. So as far as sourcing, we get a lot of inbounds that we're looking at. A lot of inbounds there, which actually convert very nicely, are referrals from our founders and people within our network. So we get connected to a lot of them. A lot of people in the ecosystem introduce them to us in some ways. And we have a very high conversion rate for when the founders in our portfolio are sending us or introducing us to other entrepreneurs. And that's a signal of in some ways an NPS score of sorts, like that when founders that we partnered with, or we've had the good fortune to partner with, are referring investments to us. So that's a great sign for us in many ways, that they're doing that, and we have very high conversion there, because our investee company founders also know what we're really looking for, and they put in a great word as well. So in many competitive situations, our founders are helping us in terms of converting, or helping us in convincing the entrepreneur to partner with Nexus. So that's what happens. There's also a lot of outbound, people leaving from companies, or we get to know from our network that people are starting companies. So we're always reaching out to them as a team. We're very, very nimble, very scrappy as a fund. We always try and do more with less. Very entrepreneurial in nature. So that's what we try and do. Reach out to entrepreneurs, get on a call with them, whatever time of day it is. Pretty much talk to them, try and get to understand whether they would be a fit for what we're trying to do, and bring them in. That's what I would say from a process thing looks like at our fund. And we obviously are doing a lot more PR, and a lot more structured events around around things that you're doing. Specifically like, we're doing things like coffee with Nexus, conversations with us. We're doing small events. Those really help us to kind of engage with the ecosystem in a much more targeted way. Like we do events for developers, we do events for, where we have portfolio co-founders come in and speak. We do round table, lunches with our founders and people in the ecosystem, other founders as well, to kind of learn from. So we're starting to do a lot of that. 2019 onwards, we started to do a lot of those kind of engagements as well. So
this episode is brought to you by Mulya. You want to move fast? Sure. But without breaking things? Now that's a hard ask. The thing is, once you have some base of users and customers, you just cannot afford to risk quality. So how do the likes of Cred, Swiggy and CureFit, some of India's fastest growing startups, ship at lightning pace and delight their users and customers? Simple, they're working with Mulya as a strategic quality partner. Mulya is India's most talented and passionate community of testers. They've helped prevent thousands of bugs and regression issues. So as a CTO or a product owner, if you want to reduce tech debt, especially while you scale, do check out mulya.com. I've interviewed Mulya's founder and CEO Pradeep on the podcast earlier, and we spoke about how startups can improve quality while scaling and things to that effect. You should definitely check it out. I'll link to it in the description below. Now back to your regular programming. This follow-up conversation, can you just take us through your journey in venture capital, how you've seen it kind of change over the last decade and a half, and what you see as the way forward?
Sure. So, I've been in the venture space now from 2007, and prior to that, I had some operational experience, in the telecoms and computer network space. Right out of college, I graduated in '03. Worked in a startup in the US, then joined another telecom equipment vendor called UT Starcom. Was with them in the Bay Area and in India. And essentially in the product management space, they were building a triple play solution. So as a product manager, eventually became the product manager for that product line, and then also moved in and got additional responsibility of taking on things on gigabit Ethernet, passive optical networks, or fiber to the home kind of technology, as well as class 4, class 5 switching. So I did that for about 2 years, and then joined Ericsson. And I was a solutions architect at Ericsson for about a year. And I had three and a half years of sort of operational experience before I got into venture in 2007. And that really one of the things that happened was that I really loved technology, new technology, and understanding how products would be taken from from R&D labs to the market. So that was what my experience prior to venture was all about. As a product manager, it was all about a particular product going into market. As a solutions architect, it was about how do you solve a business problem with a bunch of products put together, and how do you how do you understand the customer's needs and their business problem, and then understand how the technology would solve. So I think that gave me a pretext, like a good understanding on in terms of what is needed for to understand on technology, the technical and commercial aspects on how to take a company thing. When I was doing when I was at Ericsson, I started doing my CFA. I did my CFA level 1 when I was there in the first year, and I had this budding interest in sort of finance, and I thought that I would want to do that, and the only way I could do that without quitting my job was actually doing my CFA. So I started doing that there. And somewhere down the line, instinctively, I felt that it'll be it's great to combine both technology, finance, entrepreneurship, and all of those things. And while I was at Ericsson, I was researching a bunch of startups to kind of integrate their solutions into our offering. And I used to get this question asked a lot: that is this company venture backed or is this a bootstrapped company? And that's that question, when I was looking at solutions, I used to go to their websites and look at who was backing some of these companies. And that's where this kind of love affair of understanding, that VCs were backing some of these solutions and these companies. So that's how it kind of started, and that's how I got drawn into the whole venture space. That hey, there are these bunch of people who work with entrepreneurs taking these products into market. It's a combination of technology, finance, entrepreneurship. It sounded and it felt uh, like I was so drawn to doing that, right? And so I started in 2006. Started talking to VC firms, and then back then, I just want to give you a backdrop about it. Venture was really early in the country. Till 2006, you could not take a loss-making company legally public, and that was that in India. So that's the backdrop under which the venture industry. There were very few firms. I started talking to them. All of them had this real thing for lust for people who were consultants and who were essentially post MBA. So when I started talking to them, back then, getting an operator to do VC either happened when you're a CEO of a company and you were going to do venture or private equity or venture, but otherwise that was the standard route. So that was the backdrop before and my interest levels are only growing in Ericsson, and it didn't help that Ericsson is a great company, but for me, I was very entrepreneurial, very fast moving kind of a thing. I don't like deep amount of structure and large companies and large teams. And I always realized that my experience at Duty Stockholm was a lot more fulfilling in that sense. We had our own set of challenges, but it was a young startup. Grew really fast to be a multi-billion-dollar company. But that phase was amazing. The ability to do things, move things, break things fast, and just execute was amazing. So I realized that didn't want to be with big companies and all of that stuff, and I wanted to do something entrepreneurial. So in '07, I was talking to a bunch of firms, and Reliance Capital, which was at that point of time the largest asset management company in the country, was starting a prop book thing called a prop book entity called Reliance Ventures, earlier called Reliance Technology Ventures, which would be investing their principal capital, which is their own internal balance sheet capital into startups. And so I joined them in '07. Pretty much to get things started. I was a second employee in that entity, a founding team member. So pretty much I went from a CFA level one engineer, deeply passionate about companies, startups, and all of that stuff from a distance, and being thrown at the deep end of the pool in many ways. I didn't know anything about what I was doing. I pretty much don't know much, even after whatever 13, 14 years. But back then I absolutely knew zero, right? And so it was quite an experience. I had to learn by myself. I had to read up. So that, but I personally, that was one of the best experiences in my life to actually, build out, help build out a venture firm at the age of 26. It was phenomenal, right? I think the journey that happened in that time, from when I was 26, working in a structured big place to then going into a place which is like completely unstructured, where you have to build deal sourcing, you have to build an entity, you have to build everything, the documentation around how we should do things, like build a thesis around what we would want to do, all of that kind of stuff. So, and let me tell you, the backdrop was, as I told you, was that the venture industry was very young. There were very few investment firms at that point of time in the country, early stage venture firms. And the also there were very few successes, which were companies which were venture backed. Traditionally, if you looked at the stock market, very few companies were either private equity or venture backed. A lot of them had raised money from over traditional promoter group companies, which had raised debt over the years and had gone public. So debt was a financing vehicle. The equity culture wasn't there as much, or in terms of structured capital which were participating and partnering with these companies. So, that being the backdrop, and plus the other backdrop was, 2007 was the heyday. It was absolutely the heyday of venture, I mean, of global liquidity. It was absolutely crazy. So I got to the party when everybody in the party was deeply drunk, and, there was all kinds of excesses and all of that were happening. Um, so with the backdrop of that, that's how I started my venture career. My first investment didn't work out. I was very deeply focused on technology, and the company had great technology, but didn't have the ability to take it to market in a very effective way. And by the time they got to take it to market very effectively and successfully took it to market, and got the product out and became a profitable company. Their biggest customer went bankrupt, and we had lots of receivables against that. And as a result, the company deeply suffered. So, and I saw 2008 the crash happening as the, one and a half years into my venture career, and that was quite an experience, a sobering experience where you got to understand, what can go wrong, right? I mean, that's the first time where you're seeing things firsthand, right, in terms of how capex cycles recede, what happens when liquidity goes out, what happens when corporate profitability gets hit. So all of that. So I did that for about 4 years. I was at Reliance Ventures for 4 years, invested in a bunch of companies. One of the things that I was doing even back then was investing to cross-border companies from India into the US, into the Bay Area, into Silicon Valley companies. So I was looking at companies there, and as well as looking at companies in India on the domestic consumption side. So this thing of being cross-border plus India was something that I've been doing for the last now 13, 14 years. And that was a thesis because we at that point of time to find great technology companies in India wasn't the case. I mean, there weren't any great technology companies in India. All of them were in the US, so we had to go out there and look for companies there. And we were obviously going to invest into the India consumption story. So the firm got built out, and the challenges we ran into as a group was because we were principal investments, and the corporate group had lots of issues, and Reliance Capital wanted to eventually become a bank, and we were forbidden. You're not allowed to invest into venture assets if you want to become and apply for a banking license. They were all, and the telecom scandal happened. All of them impacted the balance sheet of Reliance in a very deep way. And that led to the fact that we would be going very, very slow on new investments and doing very little follow-ons. And I realized firsthand that the that you it's these cycles impact big companies over a period of time. And that's when I said that if I had to do this, and I love doing it. It was absolutely clear that I wanted to be doing this, and I didn't want to go to B school or any of that stuff. It was very, very clear that this is what I love doing, and I would learn a lot more by partnering with entrepreneurs in their journey. And that's when I started looking out for opportunities with funds. And I said that I would do it not with corporate entities, but to do it at funds because there would be dedicated vehicles to invest into the journey, and they were better structured, in every mechanism, even from an incentive structure or all of that. The incentives were aligned towards value maximization in as many ways possible. So, that's when I started talking to a few firms. I started talking to Nexus. The team, great team, very small team, very entrepreneurial, uh, phenomenal bunch of people. Enjoyed my conversations with them. I was talking to other firms, but just Nexus stood out. Also, the fact that they also were, since 2006, 2007 time or 2007 time frame, the same vintage as in my case, were investing to cross-border companies on the tech side and were doing domestic consumption. I felt that there was a great fit to kind of join hands. And I also, when I was talking to some of the other funds in the country, I just felt a bunch of the people on the other side were a bit of too full of their brand, the mothership brands, and they were franchisee funds, and they didn't have the hunger or I found traces of what I found at Ericsson and big companies that I was talking to in some of the funds, and that kind of is an attitude I still have an allergy towards after many years of being in the venture business. That people have so much of pride and arrogance in their brand names, which are resultant works of their founders having done a lot of groundwork decades back or tens of 15s of years back, right? So I love the entrepreneurial spirit at Nexus and their focus and the people. And that's when I joined them. And I've been with Nexus now for about 9 years. I joined them in the Mumbai office. Just going back to the point that we are deeply entrepreneurial, we realized that we needed to have a presence in Bangalore. They had the faith and confidence to kind of tell me under a year into the Nexus journey that why don't you go out and get things started in Bangalore for us. Deep amount of faith that they put in my hands to kind of do that, and which I did. and learned a lot in the process of kind of getting things going. So that strain of deeply being entrepreneurial, doing more with less, being committed to founders, building out an institution, building out a brand. It has been a very fulfilling and a very rich experience for me at Nexus over the years, because you're really trying to build out something, and that satisfaction is far better than being in a big fund, or which at that point of time. Today we are the largest homegrown fund in the country. So having seen that journey along with my colleagues has been, phenomenally satisfying. And more importantly, having partnered and got the opportunity to partner with some of these entrepreneurs has been great. So that's been my venture journey. Of course, as I said, still continue to do cross-border tech and domestic consumption. And that's been my that's what I love doing. I think India will produce some great tech companies. Hopefully, we would have the good fortune of partnering with them. And I think India, if you get the right models, will have some phenomenal large consumer internet, education, healthcare. All these spaces will be disrupted with new age approaches, and hopefully we find ourselves as worthy partners to these entrepreneurs.
Fantastic. Yeah, you've
A
seen
a
that
lot
whole.
has changed in the yeah, a lot has changed. Just to answer your question, a lot has changed. The ecosystem has gotten a lot more
Yeah,
progressive. Broadband is now pervasive,
yeah,
the geo effect, government democratizing a bunch of things, Aadhaar, a lot of logistics getting better, payment
yeah,
systems getting better.
yeah.
All of that has led to the backdrop. If you ask me, the real venture journey has only started in 2016, 2017. You look at the cohort of companies before that, and you look at the cohort of companies after that. The ambition, the
Orders of
capital availability,
magnitude difference. Yeah,
and it's phenomenal now.
yeah,
And what people are able to build over the last 3 years is phenomenal. So as a venture investor, I would say we were just doing net practice in 2007 to, I would say, 14, 15. Just learning the ropes and understanding, and learning from our mistakes in many ways.
right.
I think the game has just started now, and I personally also believe that there'll be some phenomenal companies created, a lot of gas also created, but a lot of
Yeah,
phenomenal companies being created.
yeah.
And yeah, so
Yeah, people have become
that's a great backdrop.
so much smarter now. I mean, there's so much aware now than before. I mean, because 2007, 8 was when I started in startups as well, and the one memory I have of 2007, 2008 is there being a lot more consultants and advisors than actually founders. So if you went into some of these startup events or whatever, there were so many of those kinds, right? And yeah, I mean, since then, I mean, we've evolved like tremendously. I feel like the founders I talk to right now are so much smarter than what I was like 4 or 5 years back when I started up. It's just amazing. So you have all of this, technical knowledge from Ericsson, and then you pick up finance skills from CFA, and then like you're armed with all of this, and you want to apply this thesis into investing, right? So, and then your thesis meets reality. What are your first few learnings from investing?
You have to get the team right. It's all about people. I think that's very important. You have to get the team right. You have to get the market right, and you have to get the market timing right. And more importantly, you have to get the business to be taking their product or offering into market in a very differentiated way, and constantly endeavor to build moats in any business. I think those are the fundamental things. But if you don't get the people right, none of the other things matter, because sooner or later
Mm,
there will be somebody else with an idea, who would copy it and disrupt you, because they can run it better. I was at Reliance, and one of the things that I used to keep walking by in beyond the headquarters, and you would see this, that ideas are nobody's monopoly. That's what Dhirubhai said, right? That statement, I would walk through it every day and think very deeply about it and learn. And that is actually so true, right? Because if you don't get the people right, somebody better than you will come out there and do disrupt you. So you have to
yeah,
constantly endeavor to get the best teams, and you have to go after a market. In some cases the markets are not obvious, some cases they are non-obvious, and they develop over a period of time. There is, but you should study the patterns of why a particular market is unhappy with what with the status quo and why it would shift. Why would there be value migration? There would be some value migration happening naturally with technological advances or certain things, but there would also be a deep amount of dissatisfaction with a particular way a business is structured today. Whether you look at a Meru, which was deeply unsatisfying experience for customers, and it could be done with a multi-sensory device like a phone. The entire experience of on-demand cabs could be done in a very intelligent way. So that is something that could happen. So you have to study the patterns around where is the customer deeply unsatisfied, and how can the business or offering or the product of the company deeply solve that problem. And of course, if you get large markets at the right market cycle, um, you know you will eventually, and you have a very unique way of getting the product to the customer. You will find good distribution, good word of mouth, a lot of good things working for you, positive reinforcement loops working in your business. I think that's those are the core learnings. But team is 85%, 90% of it.
Right. Right. And the last time we spoke, you're talking about fund number five, and how some kind of thesis emerges with every fund, right? I mean, like you spoke about developer tools, for example, emerging as a key market where developers become more autonomous and they have more buying power and so on and so forth. Now, when such a theme emerges, like how do you sort of track these things? What are the things you track to sort of develop an overarching thesis? And how do you back yourself to say that what, there's a viable enough thesis, there are enough companies, there is enough of a market, and then go out and invest in this?
So, honestly, it's always easy to connect the dots looking backwards, and say, we were very smart because we did this, but that's not the case. Let me tell you, be very honest. That's not the case. I think one of the things we fundamentally at Nexus do is look at things bottoms up, in a very first principles approach, and study the backdrop under which these companies are getting built. That's what we try and do, right? Whether it was in a Postman or any of those things. Obviously, there are some macro trends, right? I mean, when Mark Andreessen wrote about software is eating the world, it became very obvious to any capitalist who's
Right.
reading that to say that if software is really eating the world, and you really do believe that it is, then the builders of those softwares will be highly empowered knowledge workers, right? And then sooner or later you see some of these crazy things that come out of that. GitHub was acquired for whatever, $70 billion, and the most in the pyramid of people who can have the biggest amount of impact in the world are not only money managers. I'm keeping those out of the loop, but like builders who are building technology, right? And these hackers who are going out and building, or the technologists who are building these out. Now with that as a backdrop, that's always somewhere in our mind that this is what is happening, and we are obviously studying trends. We don't, as a fund, don't build thesis that we have to look for something here. Now, there are many sort of companies which have been on the DevTools side. I've had the opportunity to look at Stack, great set of people. Obviously, that sensitizes you that companies can be built out of India. But here was Abhinav. When I had the good fortune of meeting him for the first time, he just came across as an exceptional founder. He had built an open source side project, which had almost 350,000 people using it. It was a Chrome plugin, but that wouldn't have been reason enough to partner with him. But it was more about you know Abhinav having a vision around how this space could be disrupted, when he had distribution bottoms up in an organic way, and how he would build out the Postman platform, and how there was sort of, in some ways, the value migration of sorts, or technological tailwinds for moving from SOAP to REST, and how people would be building microservices, and how Postman could be a very important part of that. So we had the good fortune of partnering with him, and then, of course, to top it all off, he had two great other people he was collaborating on this side project with, Ankit and Abhijit. And we met with them, and we were convinced that this is, these guys are onto something. There was no monetization, there's none of that, but they had some adoption. It was a Chrome plugin. They had a vision on how they would complete the API development life cycle, and they were off to a pretty decent start in an organic way. So so that's how it started. I mean, and then we decided to partner and give them the first $1 billion, and we're very fortunate that they decided to work with us as a fund. They had many options at that point of time. They decided to partner with us, and it's been a phenomenal journey over the years. So of course, we learned via that journey that yes, there'll be more developers are extremely empowered. They're taking actual budget decisions. They don't like being sold to. They adopt things because it can be a productivity boost, or it can really help them build the next cutting edge stack without changing too much of behavior. So all those attributes around a great DevTools company that really helped us when we were looking at other companies that we came across. We keep learning from our entrepreneurs, and then we had the opportunity to partner with Hasura, which is another company in the DevTools space, um, combining open source motion and then building a closed source pro version also around itself. So so learnings from that investment we led to Hasura, and when we were building Hasura, we learned about other companies. So we've now got a portfolio of about 14, 15 companies on the DevTools or developer
Wow.
ecosystem side. Very recently, we had the opportunity to partner with a company called Fingerprint.js, which my colleague Abhishek has partnered with in the US. That's also a phenomenal company. So we are constantly learning from our entrepreneurs and on our journeys from all of them, and working as one tightly integrated team. Those learnings are easily disseminated rather than being codified in very, very large companies. It's not the same thing. We keep interacting with the entrepreneur, we keep learning about them, we are always talking to each other, and that really helps us propagate ideas and what is working, what is not working a lot better. And nobody better than knows it better than our entrepreneurs on the front lines. Right?
Right.
So that's what it is.
Right. Okay. So you meet Abhinav, you meet these entrepreneurs, and you realize that there is something of a market here, right? And there's something to it, and then you start investing in this. Now you have some sort of a thesis or an antithesis of sorts, right? Saying that, hey, you know what, this is a market that's developing; it'll become big enough, or this X or Y other thing. I don't think there's too much in there, and whatever. But how do you avoid FOMO, right? So how do you avoid looking at companies being funded in a space that maybe you're not very very bullish about, let's say SaaS or whatever it is, and still stick to your conviction given that you have a finite amount of capital to deploy?
So I can't speak for everybody else, but at least in my nature of personality is slightly different. And I've tuned myself to be like that. Because as I told you, the backdrop at which I've entered venture was 2007, right? FOMO was the only thing. There were people are crazy. I could see exuberant phases, and I could see what that leads to, right? Personally, and again, this is a slightly different thing, but I realize in my life and in my investing career now with about 46 companies, it plays deeply to be original,
Mm,
right? And to be original, you have to be kind of outside of the circuit and the game in some ways.
mm,
And you have to step outside and look at things with a deep amount of intellectual honesty. Keep yourself honest and look at things very, very objectively. And that doesn't happen when you enter a sort of a vacuum chamber on which most of my peers are living in, right? It's a FOMO bubble, reinforcing FOMO bubble, and going out to events and talking on at events, like pretending to be knowing it all, or whatever. I think if you approach everything with a beginner's mindset at every single day, that when you get up and you look at things outside in, keep yourself intellectually honest, and realize that your role is you don't run the company, the entrepreneurs run the company. Your job is to help them in their journey and not hog their credit and take credit away from them. And more objectively, keep supremely honest with yourself about opportunities. That's the way. So you would rarely see me talking at events, rarely see me doing random things. I don't like going out and giving gyan on public forums unless it's a very directed conversation like this one, where you ask me a question and I can share feedback and have the luxury to kind of share feedback on things. I don't like going out there and doing talks on stuff and promoting myself and doing things like that. I've just generally felt very I don't know why other people do it because I know understand venture is becoming a sort of a celebrity centric business where people feel that that thing is happening. But I think the way I look at it is the smart entrepreneurs know, and they know who to partner with in their journeys. And so and I think that's so it's a personality trait that I've developed, and I think when you're deeply original, you could potentially be deeply contrarian, and if you are deeply contrarian about stuff, you can also have enormous amount of value creation happen to what the positions that you take. But I think I also have learned, venture has a slower feedback loop. I've also been learning a lot about public market investing. And if you marry both paradigms, I think you can become a better investor. So my learnings from that, crossover into early stage venture investing and learning some early stage venture investing from a qualitative standpoint apply to public investing. So I think having those frameworks kind of really help me try and learn to be a better investor. I'm not even 2% of the way there. I think 98% of the learnings are still to be learned. I have a lot to learn, and I think you have to approach things in life with humility and know that the entrepreneurs are the ones learning it. And I would never go out there and try and say that I know more than any entrepreneur that I've funded. I think they know 10,000 times more than me. But I can recognize and be a value add for them in their journey because I would have seen people make these investments, make some mistakes. I think giving that honest outside perspective really helps. So I think that's the thing, and in the backdrop of some of the investments that we've done, whenever we've done something which has been very momentum driven, or at least I can talk about myself. Whenever have done something like that, those unfortunately haven't panned out as well. Uh, you know, um like in telecoms was very hot in 2007, and I did that, and the capex cycle receded post that very heavily. And since then the capex cycle hasn't come back in a very organized way, right? So when when you take a thematic approach towards investing it, you really potentially can be very it's then you're taking a very obvious viewpoint that everybody else is seeing. And then it's all about capital. Whoever has better distribution, whoever has more access to capital can come keep disrupting you. So you don't have the opportunity to build very strong capital efficient companies as a result. So so staying outside of the crowd, looking at things objectively, having your own viewpoint, obviously learning from your peers, learning from everybody, learning from mistakes, learning from their successes, and being deeply honest about your role, your capability, and constantly wanting to learn to be better every day. I think those are the things that I at least try and learn and imbibe. And I think my bars are very high. I think I'm not comparing myself with any other person. I'm just trying to learn from some very phenomenal people out there, and have role models for entrepreneurs and investors and all of that. There's so many people who are so like a billion times better than me. I think the gap is what keeps me wanting to get up every day and learn more. So
Right. I don't know where I read this, but I think somebody said that the stakes in VC, like the gains in VC, are for not just being right but also original, right? Because otherwise, I mean, it doesn't really matter as much. So, so Samir, last time we spoke about some mental models.
specifically, that's specifically right across the board in investing, across the board, right?
Hmm,
I would say it's not only this, but of course, it's being right and being original is deeply rewarding across the board. It's
hmm,
very hard to do. It requires you to be slightly, you have to be learning. You have to be a little unpopular and be ready to swim against the tide. It's not a very satisfying thing if you scrape public attention and public appreciation, but it is deeply rewarding, and it also deeply reinforcing if you can keep yourself in the habit of swimming against the tide in some ways.
right. Okay, really sorry for the interruption. I'm just going to take a minute to talk about something amazing. Clovo helps your remote teams be more productive by helping them close decisions more faster.
I've worked remotely for the last 4 months, and it's just a lot of going back and forth on Slack, on email, on Zoom, etc., but never really getting to a point of execution, right? Well, Clogo makes things a lot more simpler. You can have communication contextually around decisions that you want to make. All you have to do is open a thread on Slack like this and continue to talk about what you want to do. With a set agenda. It could be your product roadmap, it could be a marketing campaign, it could be a support ticket, etc. And once you're done, it all syncs with your Slack, and you have all of these decisions accessible when you need it, where you need it, right? Guys, I've tried this out and it makes you super productive. If you're even remotely interested, I suggest you go to clergo.com, that's CLERGO.com, and check it out for yourself. Cheers.
Right. So last time we spoke about a few mental models. We briefly touched upon it, right? So what are some frameworks that you use for evaluation? And we spoke about this also, that sometimes these things are counterintuitive, and sometimes you have to hold competing thoughts in your head and so on. Seems a bit complicated. So can you talk us through some of your frameworks for evaluating startup opportunities, investing opportunities, and so on?
I think I talked about briefly this thing. I'm not going to plagiarize, mental models and all of what Charlie Munger says and all of those things and pretend to be smarter than other people. I don't think that makes sense. But I think the mental model is essentially looking at people and understanding. I wouldn't say it's a mental model, but it's a qualification model of understanding people and what drives them very deeply, and why they're motivated to doing what they're doing. If you ask me, the most fundamental question for any entrepreneur walking through the door, or me meeting any of them, is very simple. Why are you doing what you're doing? It's all boils down to that, and the answer to that reveals everything that there is to know, or there is to understand. In that one question is such an open-ended universe of things that can help the entrepreneur plug in or bring to the fore all the aspects of his life and the prioritization around those aspects to helping him bring to the fore why is he building what he's building, right? I think that's as simple a question, but it's a very simple question. Answering that is not easy, because, and if you study the answers to that across entrepreneurs, then you would come to recognize a pattern, right? As to what is it that people are building this for? What is the motivation framework? What is the capability framework? What is the insight framework? How do you think that they feel that they can succeed when others might have potentially failed? So all of them, those become sub answers to this particular question, and I think that's the most fundamental question that I try and ask in different ways and try and understand from the entrepreneurs. If you look at it, everybody pretends to be smarter than they are in life. But if you look at it, the why, what, where, when, how question, if you apply that, that's what venture investors or any investor is supposed to do. Answer these 6 questions or 5 questions around simple, open-ended things of what, why, when, how, where, um, when, right? These fundamental questions are timeless, right? These fundamental questions are the ones that you need to ask. It's the answers of this that is skill of connecting and understanding whether it makes sense. So there is no mental model. I'm not smarter than anybody else by a far shot. I might be the dumbest one in the room in most cases, right? But I think if you understand that it is about these 5 or 6 things and drawing the answers to this and drawing a pattern and drawing an understanding from these things and deeply hearing what the other person is saying, I mean, that is more powerful than having these fancy things that people go out there and propagate around mental models and things like that. It is, your every meeting is supposed to that we are doing with entrepreneurs, or every interaction that we're having with our existing entrepreneurs, or every interaction we're having with industry executives and all that, is supposed to constantly enrich your mind. If you're a learning mindset person, if you're a growth mindset person, you're always learning. And when you come to the answers of these six questions, uh, it is all about then being able to connect the dots in some ways, right? And if you can get a great connection of dots, when you connect this, and the entrepreneur also has that, and there is a match and there's a meeting of minds, I think that's when the lights go off. That this makes a lot of sense, or this is how it could be, or out of these six things, there might be three or four which are not connecting, and there would be reasons for you to pass. But there could also be reasons that hey, we need to work on this, and this is what we can do to mitigate those particular points in our journey. So I think I would say I'm making this conversation a lowest common denominator question conversation, and saying that these are the four most fundamental things, and the insight and the skill in investing is connecting the answers to this, and connecting it with the scenario, and connecting it with where things are going, and and then being able to take an investment call. It is only about this. It's as they always say, right? It's simple, but it's not easy. And in that gap is where skill is, and in that gap is uh, where where boys are separated from men. Some rules
Right.
in investing.
Right. So, we spoke about your journey in investing over the last decade and a half. Since then, a lot has changed, right? I mean, you have a lot more mature startups, a lot more mature founders. You have a lot more funds entering in the market as well. So while, I mean, we could do with a lot more, startup activity, VC investing, and whatever. It's a trend it's a trend that's accelerated for the better, right? So in this case, how are you building differentiators as a VC firm for yourself? Why should an entrepreneur choose to partner with Nexus versus another VC firm as such?
Venture investing is an NPS business, if you ask me, right? It's an unscalable business if you look at it, because you can try and institutionalize it. You can have only thing that can build a great venture investment firm, if you ask me, is great culture of being able to um, come in, be a learning machine, having a growth mindset, having the empathy to learn, having the ability to be intellectually honest, having the ability to work as a small team, and then having the ability to let go in some cases with what platform and institution you've built. I think you have to have the grace, understanding, and ability, and the giving nature to be able to bring people up to a certain speed, um, and then really at the pinnacle of your success, be able to give it out to somebody else. That's how great institutions are built. While you're always going to be a custodian of the firm and things like that, but the first few years in any venture investor's life is about learning. Then obviously, when once the feedback loop of success happens, then trying to get others up to the same speed, and then having the ability in the next in your 20, 20, 30 year career as a venture investor to then be able to let the next generation come up, which is going to look at the problems and entrepreneurs and the market in a very unique and insightful way. But only thing that scales venture firms is a great culture and great set of people around it. So and that is very difficult to get by, right? As you can imagine, everybody in the venture business traditionally is an alpha male or alpha female or whatever, alpha person, a personality, I would say. So they all are doing, they all have money on the back end, but it's not, the money is not the same, and their skill sets are not the same. But what goes into the bank account is the same for every entrepreneur, right? It's the same amount of money which every firm can give today. So what you get with that money is what the entrepreneur really has to think about. And what do those people who join you for the 7 to 10 year journey or 14-year journey or 15-year journey in some cases, what do they bring to the table, and what is the maturity level of those people, and what is the what have they seen in their journeys over the years? How can they be helpful? It's not only about connecting people, or they're great connectors and they can introduce you to companies and things like that. I think that will get democratized. You can always hire a good salespeople person and all that stuff. But the ability to kind of provide you outside in feedback on the drivers of the business, on what is really core, and keeping you also intellectually honest about those aspects, and helping you think through in a non-linear way. or give you feedback around what's not working. I think those are the essential criteria that entrepreneurs should think about when they're selecting their venture investors. It's a long journey. So, a lot of people react very badly to situations when things are bad. But the ability to kind of not react at that point of time because the entrepreneurs are at their lowest, but to be able to pick them up, gather them together and help them and stand by them at that point of time is kind of critical. So I think when people are looking at that, that's what they should look for their venture partner. There are great people in many firms, and then there are great firms as well. Great firms always reinforce this culture of empathy and what's right for the entrepreneur and doing the right things. I think that's what is there. I think there are a bunch of firms coming up, and which is great for the ecosystem. That means higher amount of cash available. But like with everything else, there's a power law and everything in life, right? I think the great firms will become greater because they will be able to get through the best entrepreneurs through their doors. Because entrepreneurs will realize that this partnership and this person and this partnership will stand with me through thick and thin and can really help me in the formative stages of the company as early stage investors. And if I do my job well, there's enough capital chasing me any which way. So a lot of people are going out there and popularizing that you get money from us and you don't need to worry about money and all of that stuff. I don't think that's the right proposition. It's if you kind of have a funnel of sorts which says that, hey, we will work with you and you could be top performing, then that is a better proposition, and than saying that, hey, we work with us and we have multi-stage and we're going to give you capital and you don't need to think about it at all, and we have XYZ. Because connections, marketing help, all of that is not, if you ask me, is more marketing tools to the entrepreneur. Serious great entrepreneurs know what is needed to build a company. It's very, very serious business. It's not about having cohorts. It's not about having these we just have very fundamentally different outlook towards how companies conclude. It's a very, very serious business, right? And a lot of people pretend, a lot of firms pretend that they can codify it and they can add this value because the color of everybody's money in some entrepreneur's mind is the same green, right? Everybody tries to say this is my delta, but actually it's all about partnership reputation. It's all about partner NPS, and it's all about what other entrepreneurs say about that particular person. When things are bad, when things are good, and when people, it's all about people. It's all about you saying that you're going to be partnering with this individual for the next few years. Does that make sense or not? Right? I think that's how entrepreneurs should think. Unfortunately, some of the entrepreneurs who are not mature enough or not experienced enough just fall for the wrong beds and whistles, and they realize that they are one out of the 50 companies that have been funded by that fund, or 30 companies that have been partnered with that fund. Nobody has the time and patience to work with them originally. Um, you know, so we at Nexus are playing a very different game. We attract entrepreneurs who are, we don't want to play that cohort game. We don't want to play this, we don't want to make a circus out of things. And reinforce our brand. We just want to work with entrepreneurs building great companies. And we realize that happens with being hot partners. We are by in some ways being tied to the hip with them. I think that's what differentiates us, and we would like that to be the thing. And we would want our entrepreneurs who are successful. I would say 40-50% of our new investments happen via connections from our own existing entrepreneurs. And that for us is very important. That metric should be 80%, as we look at it, because our entrepreneurs should talk highly about us, and connect us with people. I would say 50-55% actually happens through that in our case right now. A lot of it comes from our existing portfolio entrepreneurs. We obviously meet a lot of people, but I would say things which are converting are in that range. So I think we should stick to the basics. And do what is right for the entrepreneurs, and then their success is our success. I think if the entrepreneurs realize that, and we are all optimizing variables in that same direction, it'll all work out well.
Right.
And the fact is that you can't have 50 companies which are doing great every year. You just can't, because it's whatever people might say and think, it's not. I mean, if you look at the successes that have happened so far in the country. There, you can count them on your hand, right? Or your hand in your, whatever. The 20, 30 companies, right? I mean, and look at the number of companies that are getting funded. Not everybody is going to be successful, right? So we are not playing the option value game with entrepreneurs. And I think entrepreneurs recognize that. And the privilege of selection has to work for us as a fund, because if you're privileged, if we are privileged to partner with you, there's also privilege on the other side to partner with us, because you're doing fewer things. We will stand by you to commit with you to kind of help build these things out.
Right.
I think so. That's the approach that we are taking. Very differentiated approach. Every fund is different. Every culture is different. I know it's a very long answer to your thing, but that's what differentiates funds. And I think
Yeah.
my answer is more towards entrepreneurs, so that when they look at funds from outside in, they can choose and pick the right partners for them based on what's a fit for them.
Right. No, you're absolutely right. I mean, it's amazing that you mention it, right? Because I think people and culture make such a difference, because otherwise capital is capital, right? Like you mentioned. Um, uh, I wonder though, I mean, is there anything institutional that you can build, like something of a sector expertise or an operational expertise, like let's say, I mean, you're meeting a healthcare entrepreneur, you could tell him or her that, hey, these are things that typically don't work in healthcare or typically do work in healthcare. Or, operational expertise like, hey, if you're looking for a VP of sales, he or she must have X, Y, and Z, and things to that effect. I mean, especially for first time founders, these are
Absolutely.
things that could make the difference, right?
No, I think that's what I'm saying. As learning growth machines that we're trying to be as investors, within Nexus, and we codified that we are trying to bring from every meeting, learn something, and learn from the experience of all our interactions, and bring that to the fore with every discussion that we have, right? And so those points are absolutely things that we would try and differentiate. We see, the thing is, we can't partner with everybody, right? So if you're going to do 8 to 10 investments a year, right, and we are meeting 2,000, we can't do that with every meeting. But every interaction, we would try and ask questions which are open-ended to judge whether this is the case. But if we do decide to partner with them, then all of this is absolutely something that we spend a lot of time on
Right.
bringing to the fore. What is the kind of sales team? What is the kind of incentive structure? What is the kind of how do you take this thing to market? When do you invest into what kind of growth channel? What is the traction channel that they should follow? All of those kind of things are the nuances or learnings from other companies that we have spoken with, or we would often get onto calls with our own portfolio CEOs, or with companies in different markets, to try and understand what has worked, what has not worked, and then try and have that conversation and be the outside thinker to tell them that, hey, this is why it worked in China, but it might not work in India. So don't get carried away by just building that, because you could be building it because it worked for somebody else. But let's take what are the good things and good learnings out of it without getting carried away. Those are all aspects that we get involved with.
Right. One of the things that strikes me, actually many different things, but one of the key things that strikes me from our conversation is how anytime I mention a company, you talk about the founder, right? So I mentioned Postman, and then you talk about Abhinav. We spoke about Gaurav of Unacademy earlier. Um, what are the truly great
These guys are the
founders?
pop. These guys are the popular ones. There are lots of
Right.
them. We were very
No,
fortunate to
I,
partner
I'm
with
sure.
many of them.
Yeah.
Yeah.
No, I'm sure you would have
No, I
seen many
mean,
more.
Souvik and Aditya at Infomarket are a phenomenal bunch. I mean,
Right.
Tanmay at Hasura is a phenomenal bunch. Arvind at Rapido is a great guy. Absolutely. We
Right.
are very fortunate, Dhirendra, and on that at Total Mint are phenomenal. I mean, there's just so many. And as I said, we are very fortunate to have partnered with so many of these guys. These guys are popular because of their funding news and all of that stuff. And I think those are all ephemeral things.
Right.
So the market has a short-term memory, right? I think, but yeah, they are popular and they're the flavor of the season right now. But they are exceptional, and of course, but we have a very strong bench of some very exceptional people that we've had the good fortune to partner with.
Right. So I
Sorry,
wonder
I'm
if you
sorry to
can
interrupt
talk.
you.
No, 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 that's absolutely fine. So I wonder you can talk through some of these traits that you observe in all of them, right? So what sets the truly great founders apart?
You know, one is obviously, I would say, their understanding of themselves, their understanding of people, their understandings of market. are absolutely important. These are core parameters that that we try and judge. They're what is driving them to do something is a nuance that we try and judge. What is the incentive mechanisms, or what is the structure that drives them towards making decisions? Long-term ones and even short-term ones. Those are things that we try and study, because it's not you can't be long-term. Everybody wants to be great, but it's also short-term, the kind of choices that they've made. I was telling somebody yesterday that you asked me, how do you, when you interview candidates, what do you look at, right? So the way I look at it is that I look at their life and look at the decision tree that they've set up for themselves and the choices that they've made and how they moved from one decision tree to the other, and try and connect the dots in terms of what has happened in the past, and try and obviously extrapolate with some voodoo science in our own heads into what can happen in the future, right? So and the past is not always a reflection of the future, but it kind of can give you some pretty decent insights, right? So it is all about what are the kind of choices that they made in their lives, right? How do they do those, right? What influences their choices? Just understanding people is so important, right? Why are they doing what they're doing, right? Abhinav could have been happy doing this. He didn't want to, he could have just gone ahead and built this. Gaurav had this deep urge that, education needs to be democratized, and a platform would be the right way to do it. Tanmay had this deep urge that, the data access is spoiled for enterprises, and, how can you build a data access layer which is universal in nature, right? Or Souvik had this deep insight from his years in the construction and infrastructure market around, that their construction procurement is deeply broken, and the way it is manufactured and all of that is deeply broken, and it needs to be changed in a particular way. So it's just every entrepreneur, when you meet them at a point at a particular point in their lives, it's a summation of all of the choices and summation of all of their experiences they're bringing to the fore. And there is a vision of the market, and a vision and understanding of the market that they're telling you about. Then you have to marry the two, whether the summation of experiences can potentially meet the needs of the market that you need to judge. And more importantly, can this person have that steep learning curve of always taking optimal decisions that can drive them up through the decision tree? So if you look at life, and if you look at a conversation like that, it's more about studying the nuances around that, which is why I always talk about that founders are like that. In some cases in my life, in my career, in my venture investing, I've got it really wrong as well. And and there have been situations where I got enamored by market more than the entrepreneur, and those investments haven't panned out well. And from a very very first principles about market and people, very very first principles around it. There have been some entrepreneurs. You can get the market wrong, but you can get if you get the entrepreneur right, they'll do phenomenal stuff, right? We passed on Razorpay example. They started off in a particular market, and they're phenomenal founders, and I think that they've done phenomenally well and they've constantly evolved. And they're learning machines. We got that wrong. So that's an example of a company that we saw, and despite of all the things, we got it wrong. And there are many companies like that, and there are many companies that we invested into. There are many companies that I've invested into, which I got very 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 wrong, right? So then so the idea is that if I'm learning from those and not trying to make those mistakes, that's the thing. So, if you learn the definition of being an idiot is somebody who doesn't make the same mistakes twice, right? I think what we try and do, at least I try and do, and I'm sure everybody at Nexus does, is not become an idiot. I think that's the core part of what we're trying to do, and not to be an idiot, right? If you make that an endeavor in itself, then that's great. But despite of that, we are all a bunch of nerds, and we are all crazy, and we are all motivated at multiple times with different things in life, and we all make suboptimal decisions all the time. So it's about improving your decision making framework, but it's all about people. It's all about people. You can have all the ideas, you can have everything checked out, you can have all the degrees, you can have all the pedigree, but it's all about attitude, right? It's all about how these people and what these people bring to the fore. There are some exceptional people that you meet. They tick all the boxes, but somehow you just get up from that table and you just feel like there is something here which is not adding up, right? They're borrowing somebody else's. they're doing it because the incentive structure is that they want to appear to be like they want to appear to be relevant because everybody's doing it, and they've gone through that journey and they've done their IITs and the IIMs, they've run that rat race, they've run the the McKinseys of the world, and they've got all the tick boxes, they've got all the everything going. But their motivation level is okay. This is the cool thing to do. It's not that they are drawn to that market. They're not drawn to solve that problem. They're not drawn to getting up in a deep state of every morning and in a deep state of discomfort around not making enough progress or working on the core things that will drive the business forward. So those are things that you can judge, right? I think, and I think I touched on this last time that it's not that we are some geniuses or any venture investor is a genius. All of us are learning and learning from our mistakes, and all of us are getting better every single day as the ecosystem progresses because we're seeing better and better entrepreneurs and we are learning from them. So that's why I'm very bullish that the venture ecosystem potentially can do well because all of this access to capital, all of us investors are learning to get better every single day because if you make a monkey sit through a meeting 20,000 times, he'll get pretty good at it, right? I mean, this is a business where you have to say no 99% of the time and say what yes 1% of the time, and then have the skill where that in that 1% you're able to win that deal 99% of the time. That's what makes a great investor, right? That's how the business is skewed, right? That's where, if you look at it every year, tens and thousands of companies get started in many ways, but only a few of them create that kind of value. That power law is enormous, and all of us are learning to be able to recognize that power law, be a function of it, and to get better to be able to meet and get and build companies like that. That's the business. We are supposed to say no 99% of the time. How politely can you do it, how nicely can you do it is one part of that, but it's that 1% where you say like yes, you want to do it. And it doesn't matter whether I want to do it. If I want to do Freshworks, doesn't mean that I could do Freshworks in the initial days. I lost out on that deal, right? But it is also about then having the ability to close on it. It's also having the ability to convince your colleagues that you want to do on that you should be investing it with, that they see it the way that you are, and then to be able to convince the entrepreneur to take your money when everybody's standing on at their line with different levels of conviction and different levels of value add that they're all selling to him.
Right.
So all of those are it's not an easy business. Outside it looks like pure. Oh, this what do these VCs do? They just sit and faff the whole day. It's not that easy.
No, I'm sure. I'm sure. This has been a fascinating conversation, Sameer. I mean, really, the amount of depth that you bring to each of these things is really amazing, and the humility that you present as well. Final question before I let you go again is, it's been a rather exceptional year. We've all been under stress, right? I mean, it's been rather difficult, but there seems to be some light at the end of the tunnel. What are you optimistic for going forward?
I personally have a thesis that I'm more and more thinking about. I think we are, there are two or three or four things that I rely on. I'm going to answer this in a more philosophical way. I think, we are in an exuberant phase that everything is okay and vaccines going to come and everything is going to go back to normal. People will realize that there's a big distortion gap between what normal is and what reality is. What is the normal that they're envisioning pre-COVID? That's where at point X, and what the normal on the ground will be. There will be a massive distortion gap there, and I think people are going to wake up to the reality that the world has fundamentally changed, despite of COVID. So the markets are in an exuberant phase; they are doing whatever they're doing, but the reality on the ground is something very different, right? So I think there is this distortion gap is going to be very painful, and at the time for that is going to come, right? And the time for that is going to be is going to happen. But what I feel very, very good about is the deep hope around around the human spirit, about the resilience of mankind and the innovative nature of mankind, that we will build ourselves out of it. Right? There will be I'm taking public market mindset. There will be a decompression there, but I also feel that if you're intellectually honest and if you're realistic around what that is, and if you can see where that gap is, there will be a massive opportunity at that point of time, which will present ourselves to be building businesses or to reconstruct businesses in a very resilient way, in a technological way, which are ready for the future. So I'm very, very, very bullish about mankind. Yes, there'll be short-term issues and all of that stuff. More importantly, I just feel India as a country is a very, very resilient country. We have all the issues that you can name, all of them. We have a lot of things going for us, a lot of things, lots and lots of things going against us, right? But I'm deeply, deeply uh, passionate and convinced about the entrepreneurial act, and ingenuity and entrepreneurial passion around solving some of these problems. I think there will be a bunch of problems which will be presented. There will be companies will become very unhealthy after this, once the crash happens. Um, but there'll be a new wave of companies to get created. So I think the post-COVID world, I think we are in a distortion gap of sorts right now between market and reality. That will get corrected. In that correction is an opportunity to reinvest into companies which are ready for the next decade and a lot more resilient, a lot more innovative in their approach, very different cost structures from what people had before. So it's a time for actually transformation and transition for a lot of businesses. There will be companies which will make that transition and go on to the other side to be very healthy businesses, and which they will have very different structures and very different kind of businesses and very resilient, great businesses that will come out of this. And those will be compounding machines. And then there'll be businesses which will not be able to make that transition because they're in the hope distortion gap right now. So I think that's where if I have to look at it, that's where the market is today. And that's where things are going. But I'm tremendously hopeful that new generation of companies, entrepreneurs are going to come out to solve some of these problems that exist. If I have to have an undertone, the undertone will be that all these entrepreneurs will be building businesses which will be a lot more inherently cost effective and efficient in their lives. And the end customer will there will be more product led businesses which will come out, right? The legacy businesses will give way to a lot of these kind of businesses. Legacy and unstructured businesses which are running without technological underpinnings will give way to some of these new startups. We're already seeing it, right? We're already seeing a lot of these traditional companies giving up market share to newer, nimbler startups. It's not because they're bad balance sheets. The balance sheets of bigger companies are better, but they have a better go-to-market. They have a better approach to go-to-market. They have a better service level. They have a better level of customer affinity. So I think that's what's going to come to the fore, and that's what's going to happen, in my opinion.
Right.
I'm obviously I have to be optimistic, but I think but there will be pain. I think we are the next year and a half, 18, 24 months are going to be quite painful, because even once the vaccine comes, people are going to wake up to a reality which is pretty bad. I think so. We are I'm looking for entrepreneurs who are building 18 months out into a reality of efficiency, when people seek efficiency very heavily, and you have a product market fit by that point of time, you can really grow very fast.
Right. All right, Sameer, thank you so much. This is a fantastic note to end the podcast on. Really, thank you so much for coming back and doing this. Has been an absolute pleasure talking to you.
Thank you, Roshan. Thanks for having me over. Hopefully, I know I have very long answers to my questions, but hopefully, there are many things going on in my mind at any point at time. But I try and be myself. I don't, that's so try and present whatever a little bit I know. And,
no, but this was awesome. Yeah. This was awesome. Thank you so much.
Thank you for having me.
Yeah. Thank you.
Thanks, Roshan.
Bye. Thank you so much for listening. If you liked this episode, then don't forget to subscribe to us on your favorite platform and share this episode with all of your fellow startup operators. Also, follow the Startup Operator on LinkedIn and Twitter for more updates. Stay safe, take care, and see you soon on a brand new episode of the Startup Operator.